Good afternoon and good morning, everyone. I see there's other folks coming in the waiting room, so we'll just give it a moment for them to join in. Funny that Zoom doesn't like instantly just admit everybody, and it takes so much time. It's like it's a narrow door that people are trying to get through into the room.
Okay, so if I can do,
I think it's like because some people join right away, and then if they're joining after you've hit admit all, then you still have to admit them. Was my thought.
It's a good thought. Welcome those who are just joining. We'll get started in a minute or two. All right, I'm going to get us started because it is a minute past the hour, and there's a lot of fun yet to be had in this, the final of 4 sessions of this more than modular modern methods of construction series. And I recognize some faces and a lot of names in the group and people who've been with us for all 4 sessions, and wanted to thank you for being part of that. It's been a wonderful experience for us at CHRA as well. And as we begin, I want to also acknowledge the support that we received from CMHC. That was really crucial to us being able to mount this, and especially for our ability to engage some fantastic co-presenters and co-organizers for this series. So you've gotten to know them over the past couple of weeks in the month of February. But I want to express my personal thanks to Brandon from University of New Brunswick Offsite Construction Research Center, who's been a fantastic technical resource, for Paige from CADCO, a fantastic, not just an expert in development, but a fantastic resource for this kind of education and sharing that knowledge as well. And of course, my wonderful colleague, Mel Willarth, the Senior Manager of Education for CHRA, and importantly for this, for the Chartered Institute of Housing Canada, who brings fantastic resources to this as well. I've been trying to absorb as much as I can to learn about offsite construction from these series, and I hope that you've all also found it useful. I thought I knew stuff about community housing development, but it turns out things are different when you're looking at modular and prefabricated stuff, and I've appreciated being able to learn about those differences. We also want to hear back from you and get your feedback about this session and how it's been valuable and if it's been useful to you as well. So look for a link in the chat toward the end so that you can give us that feedback as well. So a couple of other little announcements. I want to acknowledge that I'm coming to you from unceded Algonquin Anishinaabe territory here in what's now called Ottawa. And in fact, Ottawa is an anglicization of an Anishinaabe word that means to trade and to exchange. And Ottawa has been a place of trading and exchanging for millennia. All of us have responsibilities under treaties, under agreements, under proclamations that have been made on behalf of newcomers, on behalf of Indigenous people who have been here from time immemorial, and on behalf of people who, in some cases, were brought here, perhaps against the will. And this is part of the partnership and fellowship that is key to reconciliation. As before, there is AI-enabled live translation, interpretation, I should say. Use that QR code, and I think someone's going to put a link into the chat as well to make sure that you can benefit from that, si vous l'avez besoin. Final note, you've heard this before, registration is actually filling up pretty fast for our Congress coming up in St. John's, Newfoundland. We're also finishing up the last little bits of the program, some exciting new things that we'll be announcing in the next week, and I hope we'll see you in St. John's. And the Chartered Institute of Housing has two programs that are confirmed and happening this spring, both for the certificate and for the chartered membership, and upcoming programs in the fall as well. So if you're not familiar with Chartered Institute of Housing Canada, please do check that out on the website and check out those programs that are coming up both in the spring and the fall. And I think that's it from me. And I'm going to hand off now to Paige, who's going to tell you a little bit about this fourth and final session in the series. Over to you, Paige.
Thank you very much. So just as a quick recap of what we discussed last week, so we talked about some design considerations, municipal review process, the site impacts that MMC technologies can have, or the impacts that site can have on MMC technologies, the CSA A277 certification, as well as we had a wonderful Q&A with 720 Modular. So for today's session, we're going to touch on cost and financing structures, contracting requirements, insurance considerations, monitoring and site visit protocols, replicability and portfolio-wide efficiencies, supply chain realities, and we're going to wrap it up with a Q&A with Faro International, a case study with Assembly Corps, and have a brief introduction from Build Canada Homes. So a lot to get through today, and so we might be trying to speed through some of these things, so we'll try to keep it timely. So we have Lori joining us from Faro Internationals as the Strategic Sales and BD Specialist. Richard Shute is an architectural technologist with Assembly Corps, and Will is works in construction innovations for Build Canada Homes. I'm going to have each of our guest speakers introduce themselves a little bit more when it is their turn to share. So jumping right into it, some things that we need to think about when dealing with modern methods of construction or offsite construction there are definitely some considerations as it regards to insurance. So a lot of these considerations are things that you can overcome. You just need to make sure that you are thinking about them in a timely manner as they relate to your project. So some things that that might impact your insurance is that there's less data for the insurers to use to be able to provide accurate quotes and coverage. This may lead to receiving less competitive quotes for your insurance needs and your insurance coverage, or you might not be able to use your preferred insurer company. If you have an insurance group that you already work with, they might not be the right fit for this to continue to provide insurance for this type of your new projects. Because of the way that insurance tends to work and because of the way offsite construction tends to work, there may be gaps or overlaps in the coverage that you have from your insurance companies. So you can definitely make sure that there are ways to account for insurance on every step of the way: insurance in the factory, insurance in transportation, insurance during the actual construction on site, insurance during operations. It just might feel a little bit more fragmented. So you need to make sure that your coordination is really honed in. So just making sure that you're spending that time doing your due diligence with your insurance company, making sure that things are covered appropriately every step of the way. Some insurance clauses might need to be adjusted slightly due to the fact that you're doing offsite construction. So some examples could be that you might want to have coverage for repetitive defects across panels or modules. You might need special transportation coverage while you're moving your items from the factory to the site. That being said, if your manufacturer and your GC are played by the same organization, which may or may not have its own benefits long term, there might be some moments where it's a little bit easier from an insurance perspective. So if that role is played by the same group, insurance might be a little bit easier. It may cause different issues down the line, though. And then finally, you might see some higher premiums due to the fact that it is that you're utilizing that modern methods of construction, just again because of the newness of the technology within the Canadian context. Another thing that often is brought up as a concern for projects that are using modern methods of construction is the financing, and how that works for a project. So some of the concerns that a lender might have trying to lend to a project that is using modern methods in construction, they tend to be in three general categories. There's a couple smaller ones. These are the big ones, though. Lenders typically will only reimburse for work that has been completed on site, so which can cause cash flow issues if the project is unable to be reimbursed for the work that has been completed to date in the factory. So depending on that method being utilized, this can mean that a significant proportion of your project may be completed before you're able to access that financing. So lenders don't really like to they want to be able to control the materials on site before they actually reimburse you for the work done to date. That's for the work complete. Lenders may also be concerned with who has control of those project materials. So what happens if that manufacturer ends up going out of business while the materials are still in the factory's possession? So unlike other supplies, costs are often incurred prior to the delivery of the modules to the site, which again can cause cash flow issues, particularly if your lender isn't willing to reimburse you for those products until you actually have control of the product. And then finally, many manufacturers require upfront deposits to hold a spot in the production timeline, which again is not something that a lot of financiers tend to support and pay for that work upfront. It's really wanting to pay for anything that they see on site. There are some ways that you can mitigate some of these for concerns for your lenders, though. The first one is clear upfront communication and determining what is that level of comfort, what are the perceived risks, and educating the lenders on how things actually work in the modern method of construction sector. The second thing that you can do is offer for a cost consultant or a project monitor to be able to actually visit the factory to ensure that the work that is being billed for has actually been completed to date, and that is just still in the factory's control instead of being on site. And while this is something that is an issue that has been identified multiple times, there are groups that are working on it and trying to educate both lenders and insurance companies and different organizations to be able to reduce those perceived risks and discomforts. So one group of that is called ModuRisk. They're a new startup here in Canada, and they are trying to alleviate these difficulties by identifying those risks and identifying mitigation strategies to ensure that lenders and insurers are educated and willing to work with MMC projects. So it's been an identified struggle, not something that can't be overcome, and that there are groups already working on trying to make it a little bit easier to move forward with those projects. So I think that is everything I wanted to speak about really quickly today, and I'm going to turn it over to Brandon so that we can keep on time.
Thanks, Paige. Yeah, just to pick up on what Paige mentioned. So actually, Lori's here today, and Lori will probably say this in her bio. She was chair of Offsite Construction Committee for the National Institute of Building Science. They did a survey back in 2018 on the barriers to, and this is specific to volumetric modular, I believe, and Lori can correct me later if I'm wrong. And a lot of the barriers that came up are actually finance related, procurement related barriers. So this has been an issue. It's been discussed for a while. In the last year, I've done 2 keynote presentations talking about how the real problem with the construction sector as a whole and the productivity and innovation in the sector is really stems back to how we finance projects and what everything associated with that. So I am a little passionate about this. So I will talk a little bit about that as part of my presentation, but I'm just going to start by first I should share my screen. Sorry. Let me get this right. So there. Can you see that okay? No?
No, we can't see anything yet.
Of course, the last one, and I'm Doing something wrong here. What's going on? What about now?
It is loading now.
Okay. Let me
Now we can see
see.
it.
Yeah, but you see the presenter view,
Yes, we
I
do.
assume. Okay. Oh gosh. We can cut this out of the recording. There we go. Is that better? Thank you. Good thing we're not tight for time. Okay, so yeah, I just wanted to remind folks too, because Paige was talking about in the intro about MMC and using that. I just want to remind folks that MMC is not interchangeable with volumetric modular and panelized. If you were here the last 3 weeks, you would know this, but it's part of a whole group of modern methods that strives to increase productivity in the construction sector. The first 4 categories happen to be offsite, and the first 2 is mostly what we've been talking about throughout, and that's volumetric modular and panelized structural systems. So I just wanted to remind folks of that. Now, the topics that I'll touch on, which Paige mentioned, are the cost structures and financing, contracts, CCDC considerations and monitoring, and site protocols, drivers for replicability and offtake agreements, and then supply chain realities. So one thing, just thinking about cost structures and financing, I will say right off the hop, like it is pretty project dependent, and there Lori and our speakers later will be able to speak to this a bit better than me, but it should be negotiated early on, and part of the can be dependent on your capital stack. So again, that's like where's the financing coming from? It has been shown to be a huge barrier to offsite construction. And so I have a few examples that I'll speak to, but this one example in particular, I've heard of, I'll be careful in what I say just because I don't know if I'm supposed to share too much about it, but there was a project in Canada that it's a multi-unit family, and what it was the developer had worked with the same bank, same cost consultant for 20 plus years, and they required 20% down for the MMC components. They worked through their numbers, did their pro forma, did everything, and in the end, their bank that they had a really good relationship with still wasn't willing to give them the money. So as a result, they had to dip into their equity to do that down payment, and all that schedule savings that was going to lead to more revenue quicker for market housing. Kind of like that additional revenue kind of get depleted because the finance sector didn't really have a product that made sense. And so it's been an issue for a long time, and it is in my opinion, and I think a lot of others, a barrier to why we haven't seen this increase at scale. We have to over the last 4 weeks, we've received a lot of questions around, okay, yeah, this all sounds great, but it's still more expensive. Why does it cost more? I think one thing is finance drives, so the contracts and finance those impact the risk across the supply chain, and that's really impacting the cost of things throughout. So if you're pushing more risk onto a manufacturer and it doesn't make sense, well, naturally they're going to increase their costs to build. And as a result, that's increasing the total cost of the project. When considering this, what needs to be thought about is how do we align our financing and our progress claims and everything so that risk is mitigated across the whole team. In a design build team, when you have a manufacturer, your integrator, your GC, your design team all together, how do you mitigate all that risk as a team? And so one example that I've seen with some down payments is this just happens to be a picture from Maple Leaf Homes. It's not specific to them, but in a single family home scenario, it can be as simple as, you go to a dealer, the dealer has a network of manufacturers they work with, modular builders, and they require 50% down deposit and then 50% once installed on site. Let's say the most clean, simple scenario is something like that. We get into another area where in multi-unit, again, this isn't specific to this project, but this picture came from Bonneville, which we heard from on the 10th, where I've seen something like it's 20% down due at time of signing in multi-unit, and oftentimes, public sector or nonprofit housing providers, aren't comfortable taking that on. So we've actually seen scenarios where the GC takes on that risk and does the 20% down, and that can be a significant amount of money. And then there's progress claims throughout, payment certifying and so on that happens throughout the project, so that there's money flowing to the manufacturer throughout, and we've seen that work. On the flip side, and same thing, this isn't specific to Fort Modular's project, but this was a school they did out west, I believe. And so this is an institutional project. In this project that we've did a case study on at the center, the scope of work for the manufacturer only included the factory, but the issue was that the payment was dependent on the civil site, the civil work being ready, and the modules arriving to site. So in this scenario that I'm talking about, the company was bidding on this public sector project. They knew if they put on a down payment, then they just simply wouldn't get the work. So they didn't put a down payment in, but then their scope was dependent on civil work being ready. What ended up happening is the site was not ready for 10 months until after it was scheduled. So the modular manufacturer had to sit on their modules completed in their own yard for a full 10 months. And luckily, they have been around for a long time and, were able to take on that risk. But as you can imagine, they probably priced that project much higher than what the true cost would have been because of the way it was procured and because of how risk got pushed onto them. So it's just some examples where it's like, it's really important. And we've talked about procurement and CCDC and transportation and logistics, but at the end of the day, right at the front end, how these projects get financed and how that influences all the other processes is so important. And so, our center and others are working on how to correct this. So this is the same table that I think you saw on the 10th. And Lori and I have talked about this, so I'm sure she can answer questions on it as well. But just contracts, CCDC considerations, and monitoring and site visit protocols. So things that you have to consider are, again, payment terms are key. We've talked about an MMC integrator a lot of times, or an OSC integrator. Sometimes they will play the role of that payment certifier as well. We talked about the importance of change orders, or minimizing any change orders after design. So including the manufacturer in design assist and minimizing that. And then progress and milestone draws. So what Paige mentioned at the beginning, how a lot of lenders are hesitant to release payments throughout. Sorting that out ahead of time is key. Now, there are quite a few banks, and I believe all of the big five are looking into this and looking at products now that they can offer this industry to really scale up quickly. So hopefully we'll start seeing some more solutions from lenders for this. And I'm sure there's folks from CMHC on here. I don't want to speak for them, but I know that CMHC has explored this as well, or is exploring it. Now, just going back to why we're talking about a lot of this, and I decided to throw these slides in, even though they're a bit out of scope, but this is kind of defining the problem of why we're here and why we're thinking modern methods of construction, and why it's so important right now. So just going back about the price to income ratio index. So back 45 years ago to 25 years ago, the price of a home was a 3 to 4x income. 2010, it became 4 to 5x. 2015 is the baseline in this graph I'm showing. By 2024, so in 9 years, it went up by 37%, with Toronto and Vancouver being 10 to 14 times your income for the price of a house. If you see the affordability crisis, over the past 70-ish years, 75 years, you can see how a price to income ratio has significantly worsened. And so I think this is why we're talking about, MMC and delivering things differently, not to mention all the other labor shortages and so on and so forth. But this is a key part of the problem. And some of the things that, we learned or lessons that we can take away from our neighbors. And I was hesitant to say this because of, or include lessons from our neighbors because of the geopolitical climate, but both lessons are from blue states. So I thought maybe it was okay to include them. One was in California and one was in Washington State. Essentially, what they ended up doing is they invested a lot of money into housing projects, and there ended up being almost this subsidy premium, which came with administrative, which came as a result of likely additional administrative burden and different things like that. And so they ended up seeing in like a market housing project costing about 300 to 400K per unit, whereas non-market was 400 to 500K, let's say. And in LA, San Fran, and San Jose, they went from like San Jose delays of 4 to 7 years from funding to occupancy, slowest production rate in history, in state history in San Fran, and a significant increase in cost per unit in LA. And so what it's really driving at is throwing additional money at it without thinking through how we do this as a system is not going to fix our problem. And so I think I just wanted to mention this problem before we get into replicability topic. And one of the things that I often talk about when speaking in front of folks and doing keynote presentations is just how do we drive innovation and productivity in the sector as a whole. And BCH has heard Will's on right now, and he's heard me say this before, but it is about offtake agreements and creating that sustainable demand through market and commitment agreements. And when we're talking about replicability, which is a topic of finance, we're talking about the industry's ability to scale up. It's really it's a moving target or it's a dynamic kind of number, because if you talk to many manufacturers, they'll tell you they have capacity. But if you are able to guarantee them an order book over X amount of years, then they're able to fill the factory and start investing in more innovation, which is where we'll start to see costs come down and economies of scale. And so from my perspective anyways, replicability and offtake agreements are the way to move forward. And what that means is you're getting guaranteed demand, work orders to achieve economies of scale. That's the real benefit when we're looking at it through a cost lens. I mean, there's cost predictability or certainty. There's your schedule shortage. We talked about quality and safety benefits that that are harder to quantify on a dollar value. But if you can start thinking through like that consistent demand with replicability, that's where there's going to be a huge benefit. It allows the companies to invest in innovation. I mentioned in my intro 4 weeks ago that we've worked with over 85 companies across Canada. About 30-ish of those are manufacturers. Many of them have additional space to warehouse or factory space to build more, but there isn't a willingness for them to invest in hiring up or getting the equipment in that space until they have a guaranteed demand. So that's what's kind of key to this. And then the other thing is just incentivizing time savings, which we've talked about quite a bit, and engaging the manufacturers early in the design process. And that will allow to ensure replicability. Paige and I were meeting earlier today and talking about some issues that we've seen come up in different projects, and how there are certain requirements in certain types of building typologies or housing typologies that impact replicability, but there are other and affordability, and then there are other things where maybe because it's going to be significantly cheaper, there's a trade-off, and we can allow for that to be more repeated, whether it's a type of flooring, a type of door, a type of window, etc. So then just talking about supply chain realities, I think we got into this quite a bit last week with Craig, and I'm sure Lori will have some thoughts on it as well. But just the Canadian manufacturing capacity, So I think this is a question that a lot of people are unsure of. And by a lot of people, I mean everybody. We've had we've did an initial study last June where we were only looking at volumetric modular, so again, category one. And we, based on a very high level data, we're able to say that the current industry could maybe build 25 to 50,000 units a year. And then with just like guaranteed work orders, that could go up 2.5 to 3x, let's say. But that doesn't include your mass timber producers, your precast concrete producers, your panel producers, and everyone else in the whole MMC kind of landscape. Lead time. So early engagement is key at the design phase. I'm going to let Lori speak to lead times a bit more, but given her role and her past experience, but lead times are something to think about. And a lot of times, we talk to manufacturers now, and they're saying clients are coming to them about projects that they want, in May, whereas that factory time's already booked. They should have been really coming in the fall for something in May to make sure that their project is in the queue. And then regional constraints. So we talked about it a bit with CSA last week, but really that's company or project dependent. There's an example, happens to be a New Brunswick-based company. They did a competitive bid for a project in Ontario, and they beat out two modular companies in Ontario based on price. And so that whole regional constraint is dependent on the company, I would say. And there are many that will only work, within a certain radius of their factory, and there are others that it makes sense for them to go further. One thing that's important, which we talked about last week, is the CSA A277, and then obviously the AHJ in that area having experience with that, or with modular. And so last week we said how A277 speaks to the building code, or whatever building code is in the final product or final home destination. So if the AHJ allows for CSA A277 and your manufacturer has it, and there's a willingness to go to that region or to build in that region or whatever it might be, then it's a feasible thing. So I think I'm going to stop there. I went as quick as I could, Paige. And maybe we can welcome Lori to do the Q&A.
Yeah, so we'll bring Lori on. And Lori, the first thing I'll ask is if you could introduce yourself, give a little bit of a bio, who you work for, kind of the context of why we've invited you here. And then just a reminder to everybody in the audience that please put your questions, any questions that you have in the chat. And Brandon and I will go through the chat and raise any questions that are brought up. So welcome, Lori.
Thank you. Thank you. And thank you so much for inviting me to participate. I'm always interested in webinars on modular construction. So just a little bit about myself. I'm a senior sales strategist with Faro International, a manufacturing company in Stony Creek, Ontario. My past experience, though, my history background in modular construction goes back over 35 years. Where I have been involved with different companies on both sides of the border. So a large manufacturing company in Canada for about 35 years. And simultaneous to that, I was working with one of their manufacturing plants that they owned in Pennsylvania. So I have a bit of a sense of both sides of the border and what the differences are in the two markets. I really represent Faro as a subject matter expert and a strategist at this point. I work very much, though, with CSA. I have been involved in the CSA development of their standards Z250 and Z252 over the past few years. I chair the Modular Construction Oversight Committee for them. And I actually sit on the board of directors with Brandon on the UNB Offsite Construction Research Center. So very, very involved in modular construction over a period of time, and really happy to try and answer some of these questions. That was a lot of content, and now my brain's trying to compartmentalize everything. But Brandon, I'm sure you'll lead me through this. We've had lots of these conversations before, so I'm happy to just get going.
Sounds good. Yeah, I mean, Lori, one thing I will start off with, and as I'm mentioning this stuff, maybe folks can submit their questions. But just going back to the lead times and factory planning and things like that, if you're comfortable, I know that's outside of what we talked about on yesterday, but the just in your role in especially in your previous role where you were really on the front end of looking at, RFPs coming out and the pre-construction aspect and understanding, when customers are coming, what are lead times, what are some considerations, how far in advance in general should they be thinking about it? Is there things around just lead times and engaging the manufacturer that you'd want to speak to?
Sure. All of my involvement in modular construction has been more in the pre-construction phase. So I've been at the front end of just about everything. So yes, from the RFI perspective, I think really everything about modular or MMC is all about timing, right? It's really an acceleration of a process, and so lead times become critical. Every manufacturer is going to want to build a pipeline of potential projects. And a lot of manufacturers are not just involved in housing. They could be involved in commercial or hospitality. They could be building hotel rooms. Healthcare is a big one. So different manufacturers have different vertical markets that they do work in. And each vertical market brings with it slightly different nuances, I guess, in terms of how you proceed with it, the repeatability that we're going to be talking about, and that sort of thing. But one thing that remains consistent is lead times. You talked about early decision making. You talked about bringing a modular building company to the table early even just in the concept stage when you're discussing the project. Doing that is going to teach everyone around the table, all the project participants will understand the best practices of working with MMC. And I think that's really critical to the process. So lead times is a part of it. But early design decision making and just making all the decisions that are necessary between the owner and the GC and all of the operators, whoever is involved in this project, that's what sets the project up to start with. So lead times are critical.
Yeah. Thanks. And then just talking about cost structures and how that differs from on-site versus off-site, and maybe what cost categories owners might typically underestimate when it comes to off-site construction or MMC.
This is a big one. I think, you can look at a project and an owner can just evaluate a project, look at a traditional offering. They look at different forms of MMC, and you're going to see different cost structures. You might see different values that are presented at the beginning. But I think what most owners don't take into account is kind of the predictable outcomes that you should be expecting to get out of MMC or modular construction. You should expect schedule compression. I don't think there's a spreadsheet that anyone's developed to this point, at least not that I've seen, that you could actually drop in predictable outcomes such as, what's the value of the compressed schedule? What does that mean in terms of finance? What does that mean in terms of dollars? Are my loans, compressed now? I don't need to be borrowing for such a long period of time. So what is the ROI? What's the value of that? What's the value of improved quality? What's the value of lower deficiencies? What's the value of cost certainty? So there's a lot of value propositions that MMC brings to a table to an owner, but yet there's really no way of dropping these predictable outcomes into a spreadsheet and suddenly you come up with an ROI, right? There's a tendency where owners will look at the price, the cost of per square foot of one versus the other, and sometimes they'll make a decision accordingly. I don't know if I've answered your question, but there's a lot of factors to be considered, and there's really no mathematical way of instantly or easily doing it. So it does take a lot of conversation at the front end to figure it out.
Yeah, and then when thinking about projects in terms of risk, are there certain aspects of the project when you're doing modular? I'll stick to volumetric modular because you've spent most of your all your career
right.
in that. So volumetric modular project risk. So whether it's production delays, transport, craning, is there anything that most influence contingency planning or cost certainty? We often talk about cost certainty as a huge benefit or cost predictability being a benefit, but have you seen specific things that owners or project managers should be more mindful of when it's offsite versus traditional, let's say?
I think it's just corralling all of the decision makers and the approval processes and putting a stake, kind of you have to put a stake in the schedule. So at some point you have to kind of fix the schedule. If you picture this, volumetric modular construction, it's a big manufacturing facility, right? And so any modular building manufacturer could actually have 10, 15 construction projects all going on in various phases at the same time. So it's almost like you're going to book tentative production space, like you set that up at the beginning in order to have a project finished by a certain date. The modular building manufacturer needs to have a start date, right? The start date becomes really critical. Now, what affects the start date? So there's the production delays, approval processes, or maybe it could be financing, I guess. But generally speaking, the approval processes will impact mostly production timelines. So from a modular building manufacturer's perspective, if your project is scheduled to go into the plant on a certain date, there's always float time allowed for in the schedule. If it's expected to go into the plant on a certain date and there's a zoning issue, or there's a building permit issue, or something changes and the project needs to be delayed, it might get pulled out of the queue, right? And then something else could go in behind it that was scheduled, or a delay in the plant if something changes in the plant. And that's a key factor for a modular builder to try and avoid that. That's the cost certainty, get all the decisions made up front. But if something should go sideways, and it can, where you've got a delay in the plant, you're delaying the project that's in the plant, but you could also be delaying projects that are coming in behind it, right? So there's a lot to consider when you're looking at modular construction. So the efficiencies of planning is it's kind of the pinnacle of modular building success. I guess that would be my biggest opinion on that one. We try and avoid production delays at all costs.
We have a couple of questions coming in the chat. So for organizations that need a competitive tendering process or a low bid type award, what are the options to involve a manufacturer or a builder early? Is it common for a modular factory to be involved in a consulting capacity in a way that leaves the project flexible for other manufacturers to bid?
That's a really good question. And this will actually speak more to the type of contract or the procurement process, the procurement model that's being used. So design build processes, you could have a design build project that goes out for bid, and you could have one team that's proposing a panelized solution and one team's proposing a modular solution and one team's proposing a traditional solution. So across that spectrum, you're going to get competitive bids, right? To go to a design bid build process, that's a little bit more difficult, because to do that, then the owner contracts with the designers design the building, and then the building goes out for bid. The building would need to be designed modular if that's the intent of the methodology to be used. To answer your question though, any modular building company who is really interested, and we all are, will be available to offer design assist. I think it's really critical early on in the design phase that the modular builder has some impact or input in the design to optimize the efficiencies of modularization. And I think generally speaking, most modular building companies like ourselves, we would be open to just trying to assist. If it goes out, you create a performance spec that can be bid by other parties or other builders. But the key is to just get to the table in a design assist role at some level. And it's not even design assist, that's part of it, but it's also just best practices. Just quickly, Brandon brought up National Institute of Building Sciences doing the survey back in 2015. They did, and Brandon mentioned one of the barriers was finance, but one of the biggest barriers was just lack of understanding. Design and construction culture, just people don't know how to work with it. So a set of best practices goes a long way. But yes, I think you'd find most modular building companies willing to help out to try and move things around so that it could be competitively bid. Everyone understands there's very little sole sourcing, so we all have to work towards the right end there.
And I might jump in quick too, Lori, just you weren't on the last few weeks, but we were referencing a lot the offsite construction integrator definition that the National Natural Resource Canada put out for their offsite
Yep.
challenge. And that
Mhm.
definition, for the audience, if you recall, it isn't always like a third party consultant. Sometimes it's like built within the GC team of that design build team, or it's
Yep.
the manufacturer. And I think historically, we've seen a lot of manufacturers naturally take on that role because it's just they might have, and Lori, correct me if I'm wrong, but there's
Yep.
almost a cost of doing business. Like you have
Yes,
to do
100%.
it, that is to do it efficiently and to make sure it's a successful project. They have to be involved at the design assist, but to do it in a competitive way, I think it's tricky. And one project that we've seen at the center was a design build contract that got procured and a DB team was hired, so that was done competitively. And then essentially after design was done, so that there was a manufacturer included in that, and after design was done, a Class D estimate was provided to the owner, or
Right.
Class C maybe, and then the owner had the opportunity to jump off, take that design,
Yep.
and go to a competitive bid, or to continue based on the estimate that got provided. And so
Yep.
I think that is one way. Now the counter could be that, not every manufacturer, volumetric modular manufacturer, designs the same, so there's always going to be some rework involved, but that is a way to get the design or the OSC integrator involved early through procurement, competitively
You do
through
need it.
procurement.
You're absolutely right, Brandon. You do need that level of consultant. You need someone who understands modular construction, and modular manufacturers are going to be very careful not to become involved in helping develop a project, even if they know it's going out for bid. They don't want to become involved in a project that they could be declared a conflict of interest, and now they can't bid because they helped with the design, right? On the flip side, in parallel to all of this, a lot of effort is being put into education, even just with architects and engineers. Just the more architects that understand modularization and how to optimize the efficiencies of that, and the repeatability, we'll probably talk about that. But the more architects and engineers that are really on board with modular, and there's that number is growing, there'll be less and less reliant on the modular building company for assistance, right? So at some point, they will be able to actually produce drawings, whether it's a DBB or a progressive design build or 5B, it doesn't really matter. They will be able to produce performance-based drawings that are modular friendly. They might not get into the actual connection details, right? They won't get that prescriptive, but they will make sure that it's performance-based enough that multiple parties could bid it.
So another question in the chat has come in. So throughout these sessions, we've been talking about how MMC factories could be ready to expand so long as they have a pipeline and some consistency in work. However, are there any concerns surrounding availability of raw materials if they were to successfully scale up? What are your thoughts on ensuring reliable and sustainable procurement of raw components, especially in our current trade climate?
Yeah, I think it's really very important that a good modular building manufacturer, we have good solid purchasing departments. We have a good solid supply chain mechanism at Faro. We're always looking for multiple sources. We're always exploring. It's a cost and availability, and not necessarily in that order, unfortunately, right? We do try and source locally. Faro will try and pull in as much material as they can within like 100-kilometer radius if we can find suppliers that do that. But it is really important to keep your eye on the ball, because the supply chain, I mean, we know what happened through COVID, obviously. There was a lot of, starvation. But it's a very critical point for a modular building company to keep the eye on the ball with supply chain constantly. And understanding too that unlike a specific GC project in traditional construction, at the same time that the modular building company is buying for this housing project, they're also buying for other projects. So they're always looking for volume. They're always looking for, best buying, right? So they're always sourcing. We're always sourcing materials.
Brilliant. Another question from the chat. Does it help with scheduling to be a panelized or components-based manufacturer? And I presume it's going to be as opposed to a volumetric.
Well, I don't know, and our gentleman from Assembly Corp might have a totally different opinion. Really, any type of prefabrication is anything you can take from a site and move it into a controlled environment is a benefit, right? You're improving something. So, I'll say volumetric modular construction, in some respects, we actually start with panels, right? Because we build frames, walls, floors, roofs, and then we assemble them into 3D. From a volumetric modular perspective, we try and get the buildings up to 90%. And then this is a segue into anything we want to talk about the financing side, but we try and get the buildings to 90% so that when they go out, we are absolutely reducing the amount of on-site time as much as we possibly can. We're shrinking the on-site activity exponentially from, what would be 100%. Panelized is going to certainly help in that regard as well. And volumetric modular even more so because it's just that much more finished when it goes out.
Yeah, and I might just add to that the example, one of the examples I mentioned was a mass timber project. And so the time savings to me that's panelized, but there was some building envelope built onto it and so on. But the time savings I think was a couple months. I'm not sure how that is relative to the total for construction time. Sorry, but it was about 6 to 8 week time savings by doing that in the factory. Whereas, on volumetric modular, a lot of the research has shown it's anywhere between 20 and 50% time savings, right? So
I was involved in a project that was about 60,000 square feet, just quickly, up north, steel and concrete building design, a lot of modules to it. Anyway, it was, the owner just didn't want to build on site because it was mainly safety driven. It was an active mine site and it was a permanent building. Anyway, it went from a 22-month traditional schedule. Once they went modular, that got cut to 11 months in total. And then the on-site time went from down to 4, right? So you've gone from what was a 22-month on-site schedule that was going to seriously impact their safety down to 4 months on site. So and different projects have different outcomes, absolutely. But that was probably one of the best, I think, that I've seen in terms of satisfying that requirement.
Yeah. So Laurie, I'm just going to go over to an insurance question quickly. And if folks have more questions, feel free to jump in. But we talked about insurance before, and one thing, and Paige brought up some good points of considerations when about insurance. But do you want to maybe talk about how manufacturers have approached the insurance requirements or mitigated some of that? I mean, you mentioned an example to me in the past about what the transportation company might typically cover and how the manufacturers go above and beyond because the value within that module is more than the weight. Do you want to speak to that potentially?
Yeah, it's an interesting question. I was interested to hear what Paige had to say this morning about the insurance and the possibility that there could actually be higher insurance costs based on going with an MMC. And so here's how it, in my opinion, this is how it kind of plays out. As a modular building manufacturer, we would have our property insurance. And so we insure everything that's being built in the facility, materials, everything that's there. We have obviously fire, that we have all of the insurances. So now consider that your entire building, or a good percentage of it, maybe 80% of it, is actually moved from the project site that would generally be insured under the umbrella of the GC or the owner, the developer, or all of them, into the plant. So it's really off. It doesn't really, in fact, the insurance, the construction insurance at least, on site at this point. It's all under the umbrella of the modular building manufacturer. So from there, the modules are loaded onto the transporters. Faro would have an additional cargo marine type policy. Carriers have their own insurance. They have a cargo insurance for damage or upset, but the value that they carry is not nearly sufficient to cover the value of a module as it transports from one location to the other. So we would have additional insurance. So we insure the building as it's being built. Maybe it's up to 80, 90%. It gets loaded to a truck. We cover it until it gets to the site. It really is a scope of work and chain of custody conversation, I think. And this is negotiated between all of the parties. Who is going to pick up what insurance where? So if we were to, depending on our scope, if we deliver the modules to the site, if the GC now is, if they're in custody, care and control is transferred to them, it's under their insurance. They're probably going to then push it down to the rigger if the rigger's craning, right? I mean, this is how it all kind of plays out. So it really does come down to the scope of work and the chain of custody and who has insurance at what point. And my question would be more, is it actually possible that when you consider 80 or 90% of the building is being built under Faro or a manufacturer's insurance and no one else has to really worry about it at this point, is there a savings? I don't know. I don't really know that anybody's actually looked at that. Or do the developers just have a typical fallback where they would just, well, we always do it this way, and so we're going to carry the typical insurances? That's a good question that I have for myself that I haven't got an answer to. But anyway, it does come down to scope of work, who's responsible, and it all has to be covered in the contract, right? Every contract, for all kinds of reasons, because MMC is so different, every contract is going to deal with all of the nuances, and there always is negotiation as to who's going to pick up what where.
Yeah. Now, talking about lenders, are there any common lender concerns or any documentation or assurances that have helped secure financing when you've been approached by clients in the past? Or
Yeah, that's probably not that's not something I'm going to have a great answer for, but I think all I can do is speak to in the public sector. So go back to the deposits, go back to what we were talking about, or Paige was talking about, you were all talking about in terms of the burden of finance and, you know, what has to come to the front end. And I think I need to be clear that it's not that the modular building company just wants a deposit. The modular building company is procuring the materials for an entire building, including mechanical, electrical, plumbing, right? All the construction materials way in advance of what you would see on a traditional construction site as materials arrived as needed. So the deposit that's being asked for is for the procurement of that. For a modular building manufacturer to have to finance or carry those costs all the way to the site after having built 80% or 90% of the actual building, it's impossible. So, so this comes down to, what do lenders need? I think the whole finance, the lending process needs to reconfigure. I think everyone needs to understand that if you're going with modular construction, you should expect compressed scheduling. You should have, you know, vulnerable families in houses much sooner, but there's going to be a realignment to how that works in terms of financing. So it's not just that we need a deposit, we just need to be paid for the work that we're doing. That's essentially it, I guess, in a nutshell. Did I answer your question, or did I go off on a tangent?
No, that answered it. I think, yeah.
Okay.
And yeah, I mean,
I diverted a little bit. Anyway.
Yeah, and there's a lot of, like, from a single family home, it's quite a bit different.
Yes, and that's that's not what I'm involved with at all.
Yeah.
I'm multifamily and commercial.
Yeah, and I think commercial is where it needs to be done. And, you know, the other thing I will just mention is, I think a lot of lenders, and then Paige is gonna kick me off, I think, but I think a lot of lenders are looking at this. We've been approached by a lot of the big banks and CMHC about this, and some of the ones that they have, that, you know, they think about the mobile home as, like, they think about modular as though it's a mobile home, and the CSA Z240 that we talked about last week, and not
Yes, and that's not what I'm-
A277, and it's that transition and mindset that needs to happen.
I will leave you with this one, and I don't have access to it, Brandon, but through the MBI, Fannie Mae is a big lender in the US, of course. There was a toolkit developed. So they had a toolkit for lenders that was developed by AIA, MBI. Maybe we should try and get our hands on that, because I was part of it, but I can't remember much of it. It was quite a while ago. But there was a toolkit developed, and maybe that would be something to consider.
Thanks.
Thank you very much, Lori, for joining us today.
Thanks for having me.
We really appreciate you sharing all of your all of this information with us and giving us your time.
Thank you.
So at this point in time, I'll hand it over to Richard with Assembly Corp. Welcome, Richard. And I'll ask you the same thing I kind of asked Lori to do, which is introduce yourself, introduce your organization, kind of give some context on why you're joining us here today.
Yeah, totally. Thank you, Paige. Thank you for having me. So I'm Richard Schutte. I am an architectural technologist at Assembly Corp. We are a modular provider of wood housing. I'm going to jump into the presentation quick. And let me know if you can see my screen.
It's just loaded. Yeah, we can see it.
I should go back to the beginning. Yeah, so Assembly is the largest provider of modular all-wood missing middle residential buildings in Canada. We are panelized, component-driven manufacturers, so we're not volumetric. I graduated with my master's in architecture from the University of Toronto, and I have a background in computational design, a lot of visual coding and programming, and of course, originally my background was working in construction. And so bringing all that together, it's been really a wonder working at Assembly for almost a year now. Really taking a different perspective, a different approach to housing, to missing middle housing, really trying to use as much wood as we can in our projects, and consider a deep repeatability and standardization without overfitting our designs. So when you have too many engineering constraints, of course, me with my architecture background, on a plan, on a design, then you're losing some of the wonderful aspects that can come out of a local unique site, a genius loci. And so we have a number of building typologies that we use to approach different projects. And most of my work is twofold. First, it's our feasibility work where we take a site, we apply zoning constraints, zoning requirements, and we apply these different typologies, but more so as a starting point than as a restriction in design. So we deliver a new model for affordable, sustainable, and healthy homes. A big part of working with biogenic materials, there's a salutogenic aspect to it of keeping people healthy, of reducing volatile organic compounds, and doing that in a way where we have a catalog of standardized factory built stick frame and mass timber housing products. So we are in the process of creating our factory in Toronto for lightwood frame wall and floor panels. And a lot of that will be around deploying configurable housing components from our product platform to sites in Toronto to really unleash their value, to create meaningful homes. So in our product platform, so we use mass timber and lightwood frame. We have standardized designs through a kit of parts. We're factory built and on-site assembled. So what is our kit? So we have a notably limited number of components that can be configurable, that are diverse enough to create small-scale suites up to mid-rise infill projects. We're truly a design-first mentality. We're allowing for freedom of a typical design, but with the efficiencies of standardization. So their typical architecture, which I'm very familiar with, is a design to order or engineer to order process, where you can imagine each building is a custom approach. Now, the opposite side of that is a select to order process. Let me see if I have that slide. I do not. Where you'd just be selecting something from a catalog. And often this can create a placeless or overly engineered design that might be good for greenfield sites, but might not create the return, or might not pencil on a challenging urban infill site. So configure to order is a process of taking a component to select that component and then configure it within a rule system. And so those rules embed design for manufacturing and assembly, and I'll get to in a little bit. I'm sure we're all familiar. And then what we do is we modify those components to be the exact requirements of on-site. And so our product platform is made from our guidelines and rule sets, our design menu, product and interfaces list, construction installation manual, our project implementation plan. We have our warehouse model, our templates, spec book, and our product collateral. I'm very technical, and so I apologize in advance that, I am going to be getting into the weeds a bit in the technical side. But that's what's most exciting to me because, in essence, those details are the true opportunities of cost efficiency, of savings, and creating affordable housing. So often we miss those little details, and during standardization, we'll lose out on the efficiencies of optimized, improved designs. So I want to talk really quick about DFMA, which is Design for Manufacturing and Assembly. I'm sure we're all familiar with that in modern methods of construction, but really it's not how we'll manufacture and assemble what we've designed, but how we'll design so it can be manufactured and assembled. So it's bringing manufacturing constraints to the front end of architecture, of construction. So within design for manufacturing and assembly, we're embedding design for manufacturing. So all of our machine constraints and requirements designed for assembly and installation on site. Obviously, with panelization, there's more complexity than volumetric, especially with installation, but that also means there's more freedom. We can think about design for risk mitigation in the building science and water control of our wall panels that are very efficient, as well as design for maintenance and disassembly. There's a huge value in using wood products and mass timber where they actually, if you design your wall details and interfaces correctly, they can have a lot of value at the end of life of that building as well. Similarly, getting into design for manufacturing, again, I always loved this little diagram on the right from Ford. In product design, you have the biggest influence on a project, and really that's where I sit a lot of time in test fits, where I look at a site and understand what building can be sited. Now, DFMA Plus is where we start to take a holistic cradle to grave approach, where we can start to think about repairs and maintenance on site with a digital twin. We can think about, again, disassembly and so forth, carbon costs. And similarly, we have a product improvement approach. I won't get too far into this, but the idea is that you have this deep iterative ability throughout the components of your projects. Now, with this product development and treating buildings as products, which I know we're familiar with, but how do we actually iterate and improve our buildings and architectural models? Well, that's by shortening that learning cycle. And so taking more learnings from projects through project retrospectives and embedding that into the culture of learning in an office. And that's something that I love assembly for. We're always learning. So I'll go through some of our projects. So we have vertical 6 pilots. So it's a 6-story multi-unit mixed-use building, purpose-built rental, 1120 Ossington Avenue, more affordable housing for St. Clair's multi-phased housing society. I know one of the topics today is around portfolio replicability and how difficult and challenging it can be to take all these different unique sites in Toronto, understand the zoning constraints, and push to build as of right housing. And so, as we look across these projects, there's a mix of CLT floors and cores, light wood frame load bearing walls, or all CLT, where we have to think about combining learnings from the building code, which I'm always learning about every day with zoning constraints. We have Passage House, Town Line Estates, And you can see we have a variety of building typologies. And so one of the difficulties is finding standardizations across typologies. Thinking about how an exterior wall can be configured, where once you've resolved that wall assembly, now it's just about understanding the connection details, how we attach that to either a CLT slab or a lightwood frame or I-joist slab. Here we have Thunder Woman, and a lot of these projects, the architectural qualities come out of the facade, but they also come out of how a building is sited on its respective sites. Here we have Wellesley, 8-story residential infill. You have 7 Venali here. 1258 Rebecca, and again, a variety of housing typologies. We have Danforth, 8-story building, 4-story connection with Heritage. We have 976 College. Again, very narrow buildings, but still, how do you manage replicability with various exiting conditions in these buildings? Here we have 415 Davis Drive, 8-story, 70 unit, still in entitlements. Lawrence Avenue East, similarly entitlements. And now we'll get into the details a bit into the system. So in creating a configurable mid-rise building, when we're not dealing with a volumetric system, there's more freedom, but there are also more rules you need to adhere to. And so here are 2 examples of, we have L-shaped buildings that are similarly configurable at Davis Drive on the right, St. Lawrence on the left, or St. Stephen's. So we've designed a catalog of units which have resolved mechanical, electrical, plumbing, structural, with a mass timber structural system. We have designed these to be able to not have to stack vertically, to have vertical chases, as well as designing barrier-free and CSA accessible variations. And we have these standard product interiors with a range of finish options. So we have 32 unit variations. There are a variety of studios, 1 bedrooms, 2 bedrooms, 3 bedrooms. We have OBC barrier-free and CSA accessible variations. And these can grow in depth as the building grows in width. And so because of that, there is this configuration, this extension that happens with the floor panels and the locations of our columns. So here, these are our unit layouts, all productized with product IDs, showing where the kitchens are, where the bathrooms are. And so the really exciting thing about these is that they've also been designed to fit around stair cores, elevator cores, garbage chutes, and mechanical shafts. And so instead of starting this kind of very traditional architectures to start top down, you have a site with the absolute maximum GFA you can get from that site. But now we're starting bottom up like Lego pieces, which I know is not new in MMC, as well as some of our others. But now truly we have configuration rules, how pieces of a kit of parts can come together to create a meaningful building that is resolved structurally, mechanically, electrically, plumbing, and now, how can we get these portfolio efficiencies through this replicability? Well, then it's through various configurations of this building system. And so here's a GIF on the right showing how some of these components come together. And on the left, you can see a diagram of how some of our units are kind of placed in this building without the need for necessarily stacking. So again, in my work and doing these feasibility studies, which are now across typologies, but I'll just focus on this mid-rise typology for now. In placing these different units, we can treat them as areas. Since they've been resolved internally, we can, with rules over how they can connect to the corridor, where we need stairs, elevators, mechanical shafts. Now, really quickly, a client can come to us and can provide them for free with a test fit of their site, give them units, costs. And so all of what you've seen here, my background in computational design, I've created a configurator to actually generate and place this geometry in Revit. Since Revit is our universal coordination software where we do our manual architecture work and where we'll do a BIM coordination, clash detection. And so it's not just about these test fits. We also have an early works process, which is after we've been engaged by a client, we'll produce a high level of detail Revit model with all the interfaces, all of the toilets and plumbing, everything embedded. And so, as manufacturers, this is kind of going beyond a design assist. We're designing the entire building, and we have a process working with architects of record and engineers of record. And so, this is how we embed design for manufacturing and assembly. And part of it is, in a sense, architects being, having a desire to be in control all the time, but really, managing that. And understanding our relationship with architects of record. Assembly Corp is not an architecture office, even though we do have architects, and understanding where that role is. How early can we bring in an AOR and EOR? And so now we are doing that as early as we can on these projects. So getting engineering sign off, getting architectural, we're trying to really push this industry to think about the roles and traditional roles differently. And so when we can have these building systems that have more pre-coordination, then we can get these projects quicker and quicker, which we found is important. So I'll just end with this GIF of a configurator. Again, this is just for a double-loaded building typology. I've also created another for multiplexes, another for suites, another for scissor stairs, which we have a number of projects going on. And on the left, you see, I don't know if you'll be able to read it. It says desired 0 bed, 1 bed, and 2 bed. So here I'm just switching through these random desired unit mixes where clients will come to us with understanding of their client demographic, their pro forma, and we'll be able to provide very close, a very, very close actual unit mix to what they need. Similarly, a very close accessibility mix. So we'll be able to meet at least their highest OBC barrier-free and CSA accessible unit counts. And so we can do that very quick on their sites. With understanding of, you can see on the far left, we have costs for wall panels. And so we're getting a very quick costing. And so you can also get an understanding of the cost implications of growing your buildings. There's a big difference between wanting to create the most units on a site and wanting to create the most gross floor area on a site. And that has implications around structure, et cetera. So thank you.
Brilliant. Thank you so much for that presentation. We have a question in the comments here. So the question is, I'm hearing that volumetric modular barrier-free accessible unit variations tend to be substantially larger than non-barrier-free variations as compared to traditional on-site construction. Of course, this then impacts your building efficiency and ultimately your pro forma. Can you comment on how best to maximize the number and quality of barrier-free units while using modular?
Yeah. So barrier-free it's not actually that big of a problem. It's really when you start getting into CSA accessible, where you have 1800 millimeter turning circles. That's when you start getting substantial bathroom sizes, and you start to switch between being able to get 2 bedrooms in a unit to only getting 1 bedroom in that unit. Yeah, and you do have a path of travel to consider, but in a sense, you want to be providing units that are meaningful and that are quality, and they are large enough. And so, once you start getting like studio units that are like 350 square feet or less, they just start getting too small. And so often, I found having barrier-free units is not that prohibitive to architectural layouts. And when you do have a building system that is, of course, my background in computational design, creating all these curvy, crazy buildings having orthogonal rectangular buildings, means you can actually have very space efficient plans. Similarly, when you have a front door that's opening into a wide space instead of a long corridor, your floor plans, when you do have a building that works from quality unit plans and builds up from that, then you do just end up having efficient space layouts where it doesn't matter if you have 1500 mm turning circles. Yeah.
Brilliant, thank you. Another quick question, and then I think we only have time for another question or two, so we'll try to get through them quickly.
Okay.
Have you designed for resiliency to climate change?
Yeah. I think part of that is well, high performing walls, high performing that manage moisture. Of course, sustainable buildings that have a lot of embodied carbon, that have a lot of biogenic stored carbon and low embodied carbon is important. So yes, designing to respond to climate change, but also designing to mitigate climate change.
And one final question, does Assembly use an integrator for these affordable housing projects, or are you working directly with these nonprofit organizations? And can you also comment on what their main challenges are, and how affordability compares with traditional housing?
Yeah, we work directly with nonprofits and other clients. And I would say the main challenge, managing high levels of accessibility, and managing tricky sites. We get sites that have, topography changes and very tight buildings, but making the most of those sites is something that you need the flexibility of panelized prefab to do. And yeah, so making the most of sites, making the most of units, and being very flexible in design. That when their access to financing might change, we need to be able to respond to that with updated designs.
Amazing. Thank you very much, Richard, for joining us today. We really appreciate your time and the information that you have shared with us. And at this point in time, I'm going to turn it over to Will, who is joining us from Build Canada Homes. Welcome, Will.
Thanks so much, Paige, and good afternoon, everybody. Pleasure to be joining you all right at the very end of this series. We have been quite happily and quietly here in the background along for the ride with you all, learning, listening, taking it all in as much as you have, and it's been phenomenal for us to see the questions, see the presentations. Even today, Richard, the ins and outs of DFMA, always useful for me, the refresher at times and new angles on it. Lori, the spreadsheet you're talking about of quantifying the financial benefits, I think you and I should crack open the spreadsheet and work on that one together. And then Brandon, yes, the daily reminder from you around offtake agreements is always one of my favorite bits to hear a little bit about. So, lots throughout this series, and I think we've appreciated the opportunity to listen and learn alongside you all. So my name is Will Maneri, and I'm the lead of construction innovation at Build Canada Homes, the new affordable housing agency for the Government of Canada. I'll pull up a couple slides if that's okay, Paige, but I won't drown folks within them. Let me just make sure that works for us. Perfect. We've had a series of webinars. Many of you already heard plenty from us, so I will not relitigate it all. But as you know, Build Canada Homes, new agency, launched this past fall with the intent of leveraging public lands, flexible financing tools, which is really the focus of today's conversation. But also a third and very important pillar from us is all about this construction innovation, which is why we asked Ray and Paige and Mel for a favor to squeeze us in at the very end to say, hey, we care about this a heck of a lot too. There's really three elements to Build Canada Homes. Part of it is building on public land, and so there is ample federal land that we are deploying for new affordable housing. We are the new game in town, so to speak, for financing offers for affordable housing with a very flexible model, which inherently is designed to try to address some of the issues that have come up here today around how do you advance more quickly? How do you deal with working capital? Well, there's lots of things in the Build Canada Homes model that we think help with that. And then obviously this third pillar around innovation. So for us, I'm just going to skip all the little bits and pieces you may have seen before, but we'll pass a lot of this on through Paige and others afterwards to make sure everybody has access to our story. But for us, we define innovation really broadly. We use the phrase modern methods of construction, in part because Brandon's been shamelessly promoting it everywhere, but also because it's very helpful in capturing the wide range of construction innovation that's out there. Obviously, our focus is primarily on industrialized forms, so really fitting with these sessions, but we are interested in a broader array as well. I think we're also humble enough and try to continue to be humble enough to recognize there's plenty modern about Canada's home building industry already. And so a lot of what we are trying to do is champion innovation adoption through our programming, through our projects, and through our work with you all and the rest of the sector. So just a couple things in terms of what we're up to right now. We have an RFI that's out in industry, which is our attempt to get our arms around what can the sector do, what does capacity look like? What are the different innovations that are out there? What does it look like regionally across the country? And I think there'll be lots of interesting resources and information we hope to be able to share with folks in the months and weeks ahead. We recognize that partnerships are really key. And again, some of our speakers here earlier spoke to the opportunities and challenges within that. How do you fit it within a procurement process? How do you fit new contracting models? I think we aspire to provide some resources and tools working with folks like Brandon and others to make that easier in the context of our projects. There's also some work underway to develop a directory of MMC firms here that have raised their hand and said, hey, we're interested in working on BCH projects. And that's the type of thing we'll be excited to share a little bit more about in the future. And then obviously funded projects for us and other opportunities in the near term. Just announced today was an initiative through our partners at the Canadian Forces Housing Agency, 7,500 homes over the coming years with an intent to focus on modern methods of construction within that portfolio. Just an example of the type of collaboration and bringing forward federal demand, pushing progress forward with flexible models that we're hoping to do in the next little bit. So again, we just wanted to do a shameless quick little plug here at the end of your exciting number of weeks together on some of our work in this space, saying we're engaged, we're interested, we're learning from the questions that you all have and the other presenters here as well. And don't hesitate to get in touch if there's things that should be on our radar and we should be thinking about in the coming weeks and months ahead. That's all. Thanks so much, Paige.
Thank you. Okay, I mean, and I think that is everything that we wanted to go over with our time that we had with you. At this point in time, I might turn it back over to Ray or Mel if they have any final words, or Brandon if you have any closeout remarks. But at this point, thank you all for joining us.
Yeah, no, thank you, everybody.
And I did an email today I sent out if anybody's looking for that CIH micro-credential. I sent out how to do that. And if you have further questions, just send me a message. Sorry for cutting off, Brandon.
Yeah, I'll be sending you. I'm interested in that. I'm gonna send you a message. Yeah.
Thank you, everyone. All right, thanks for spending your month with us.
I was just sending in the chat, like I wanted to Will Medry email. We can contact him later on.
Yes. I'll make sure we pass that on through our friends at CHRA and others.
Okay.
Thanks so much.
Thank you.
Bye now.
Okay. Bye.
Mel, we have some questions coming up in the chat around links to the video recording and access to the slide decks.
Yes, so we are creating a page on the CHRA website where they will live permanently, meeting with our comms team this week, and we'll have them up there. And once I have that, I'll send that link to everybody who participated. Thank you all.
Thank you too. Bye.
Thank you.
Thank you.